Hello and welcome to the Stock Planner channel. We're an information and education channel sharing our ideas. Nobody's recommending anything. We do our own due diligence and learn. And if you can learn, you'll win. Takes some practice, but it can be winning for life. Let's get started. I want to talk about FVRR, which is a internet program or internet facility or service that allows entrepreneurs to sell their services for a fee. There's people on Fiverr that will maintain a website, load up your videos, edit your videos, virtually any type of online service that you would like to have. Very popular. But for some reason, the stock has been beaten down lately. Let's take a look. This is FinViz. It's free. A lot of people use it. I like to start my analysis here. And you can see that FVRR, stock ticker FVRR, from its all-time high is less than half. Now we'll get back up there again. Many analysts believe it. The target for this stock is 208 according to FinViz. 208 is up in here very well. It looks like that's some kind of level of support, and it also fills the gap. It's shortable, optionable, and an analyst recommends it, or several. This is covered by a lot of analysts. It isn't profitable, but expects to be. Neutral rating by Goldman, and that's a recent January 7th. Down 44% in 2021. Is it a buy now? That's what I'm asking. And by the way, my answer is not quite. Not quite. Very popular stock. Tip Ranks it's got a hold rating on it, and it expects to go to 167. That's down from almost $200 on FinViz. Covered by 5 analysts. Underperform. This is where I think we're at. Hedge fund decreases. Technicals, as you can see, that the sliding down below the 200-day moving average. Technicals are red. Fundamentals are not all that great either. That's a lot of red there. I'm thinking it has some downward potential yet. Trading View, it's free. It has lots of indicators. The indicators I use are zero lag MACD, the stochastic RSI, and the RSI. And I'm experimenting with this. This is another zero lag. And I'm using this to try to stay in the trade longer, be more consistent. Anyway, it's red here. It hasn't turned green. The RSI is pointing down. Stochastic RSI pointing up. That's because of this. It's very sensitive. And nothing saying with the MACD. So where's it going to end in the next couple of weeks? I think it's going to end right here. 83. So we can put something together that it will be in this area here. And so we want to be able to have something that goes down and end in this area here in the next 30 to 60 days. So that would be a bear call spread, broken wing call broken wing, or some sort of calendar spread. Let's look at the possibilities. I think it's coming down. What do you think? Let's see what kind of deal we can put together. Now the first deal that I want to put together is a call broken wing spread. And what I like about this is all I have to do is worry about the upside because there's no downside risk. As long as it stays below 101 right here, as long as it stays below this line, I got a winner on my hands. Let's just put a little box there. We're going short. We'll put the break even of 101, somewhere right in there. And as long as that thing stays below, and when's my expiration? February 18th. February 18th, right about there. So we wanted to stay below that and somewhere and take a profit anytime along in this area here. And you see, is if it goes down, my profit potential goes up. These numbers here are at expiration, but you'll see here, using the table, that as it goes down, I can take a profit in this area here anytime. Anytime in January and February. As long as it stays below the 101 or in the 90 area. It needs to stay below here. I like this deal. Now, it's going to require me to put anywhere from $1,000 to $2,500 on margin. My broker is probably going to make me put $1,000. So I'm risking about well, I'm not risking it. I have to put up $1,000 in order to make 1,000 with a max potential of nearly $2,500 to $2,600. I think it's going to hover in here, and I'm going to shoot for the bigger money. Now, the other option I can do a pair call spread, and as long as it stays below, again, 102, I'm going to win about 185. And again, you can take profit, but the longer you hold it, the more you make. These are a little easier to execute, and it requires, by the way, only $500 put up. But the max profit is capped. The max profit here is not capped. And all I have to worry about, I'm taking one side of the risk off. All I have to do is worry about it going up. So all I have to do is make sure it stays below 102, and I have a winner on my hands. Do you think it's going to go up or down? Does your indicators, what do the indicators say? That mine don't say much. Here is a earnings date somewhere in February. So we're good to go there. I like fiber, but I'm not overly optimistic for the short term. For the long term, we're going to have some economic issues, and fiber, selling your services, is going to be a very popular site. But right now, for some reason, and I can't explain it, it's not. That's my trades. I'm going to use a short strategy called a call broken wing or a bear call spread, where I receive some credit with the hopes that for the next month and a half, fiber will stay where it's at or a little lower. What do you think of this trade? I think it's important to learn option strategies along with buying and selling. We have a very interesting time coming up. I think the next 2 months are going to be erratic for the stock market. I'm down on fiber. Let me know what you would think in the comments below. Do your own due diligence. Learn this stuff. Win. You got to like what you're doing, because I do. Happy trading. Catch you on the flip. Let's hit it for Monday.